What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So what we're going to be covering in this video is an update on the price action that we are seeing today. We are absolutely ripping today. And when we're looking at the option chain to kind of give us an understanding of why we could be potentially seeing a lot of these big price movements, coming off a monthly options expiration date last week and seeing a lot lower amount of open interest going into this week, and that revolves around the potential for a gamma squeeze, is incredibly bullish in my opinion, and it shows us that this is most likely retail investors scooping up more shares, buying and holding AMC along with institutional investors. Now, in addition to this, we also have to talk about this pending margin call situation happening in about a week on September 1st. This revolves around OTC derivatives, and I've seen a lot of people start to connect how these OTC derivatives could actually connect to what has been going on with the counterfeit shorting for AMC. And we have something really interesting to go over with the total amount of OTC derivative exposure that we have been seeing. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you want to see more videos like this, make sure you hit that subscribe button. So at the current time that I'm recording, AMC has just crossed above 42 and come back down below at around $41.80. We are up about 14% on the day, and I don't think this is the end of what we are going to be seeing in terms of the price moves up for AMC this week. Now, when we come over here to get a brief Ortex update, utilization still hanging around this 90.6% range. Short interest still very high at 17.87%. And in the after hours, we will be getting that exchange reported short interest. So don't be freaked out if over the next couple of days you see the short interest numbers or the free float on loan or the shares on loan kind of get out of whack. There needs to be a little bit of a rebalancing period for Ortex to get their new estimates. So again, incredibly bullish, especially when we're looking at the borrowed change for AMC today. They've only returned about 843,000 shares. Now, what we've seen over the past couple of days is that they haven't really taken out a lot of shares on loan. So it is entirely possible that the institutions that want to short AMC right now do not have as much ammo as they previously had. Now, when we come over to Stonko Tracker, we can see that there's currently 89,000 options expiring in the money at the current time. At this point, this does set us up for a decent gamma squeeze, which we need to come and look at over on AMC's option chain. When we look at this $40 strike right here for this week, 24,000 contracts, about 2.4 million shares, that is a decent amount of hedging that we could potentially see. But very similar to what we saw for the June run-up, the next monthly options expiration date and a quarterly options expiration date has a very, very high open interest at this $40 strike again. So we're going to potentially be seeing a lot of institutional buying pressure due to a lot of these options needing to be hedged so that these institutions can maintain that directionally neutral status so they don't have to go out on the open market and purchase shares at a much higher price than the strikes that they sold these options for. Now, again, we do have to take a look at the $145 strike because this is the big pile up that we have been seeing. Do I think we could get up to those levels? It's entirely possible if we see this trend continue by September. But again, no price targets, no dates, nobody really knows what's going to happen. But when we're looking at this strike right here, 61,000 contracts, that is a very significant amount of money that the institutions will have to spend if we get close to that level. Now, I know a lot of people have been saying, well, options are useless. And this week right here is a really strong example of why that is not necessarily the case. This week and last week, we saw a lot of price movements to the upside. And when we see those price movements to the upside, when AMC has a lot of these options expiring very close to the money or in the money, that leads to a lot of new buying pressure coming from these institutions. Now, let's talk about this big, bad margin call situation surrounding these OTC derivatives. I don't think a lot of people really understand how big this is at the current time, and I want to give you guys a really solid understanding. So we've gone over this article before, and we can see the opening remarks from Bob Stewart, basically the executive director of product management for institutional trade processing. And we can see here there will be an upsurge in the volume of margin calls and an increase in the need for third-party custodians, very important, to keep safe collateral. And this revolves around the OTC derivatives. We're going to go over exactly what that is, but here is exactly what these phase 5 uncleared margin calls are really stating. When we come back up to the top of this page, we can see how do UMR phase 5 and 6 affect the buy side. UMR's requirements for posting initial and variation margin, meaning initial margin is what you need to enter the trade, and variation margin could be the maintenance margin requirements that end up changing in the time that you are actually in this trade. So we can see here that in mandatory central clearing of OTC derivatives are raising margin call volume and the amount of collateral required substantially. That is going to feed into this liquidity drain that we have been seeing over the past couple of months in the market. Now, when we compare this to AMC, this may not necessarily affect the margin call situation that we have going on with these massive AMC price movements, but the fact that we are seeing such an increase in the AMC share price today, it leads me to believe and furthers my theory that we need to be more focused on the smaller hedge funds or institutions that are short AMC, because those are going to be the ones that cannot maintain these margin requirements. And an example of that would be these phase 5 margin requirements right here. Now, we also need to know who this new rule or new margin requirement situation is going to be applying to. So phases 1 to 4 covered banks, but phases 5 and 6 will predominantly impact funds and institutional investors. When these phases take effect, they will put stress on buy-side operational models and introduce new costs and regulatory reporting requirements for these firms. Again, this is just going to play into the liquidity drain that we have been looking for and seeing in the market over the past couple of weeks and months. Now, OTC derivatives are something that I think a lot of people are still confused on at the current time. The example that I like to give people is if you have seen the movie The Big Short, when Michael Burry's character goes to Goldman Sachs to basically enter into the short on the housing market, there is no product at that current time that allows him to do that. So what he enters into is an OTC derivative agreement with Goldman Sachs. Now, they can mess around with whatever margin requirements, whatever premiums that you need to pay. But again, if they can mess around with it, they can change those arrangements and agreements halfway down the road. Now, this could be used to kick the can down the road in a variety of different scenarios. But when we think about that third party that we were mentioning before over here, let's find it right here, the third-party custodians to keep safe collateral, it is going to be increasingly difficult for these institutions who are entering into these OTC derivatives to really mess around in our markets. Now, the main point about this rule that I really want to get across is the total size of the OTC derivative exposure globally at the current time. When we come over to this chart right here, this is tracking the OTC derivative notional amount outstanding by risk category. This yellow line at the top is tracking the total, and we can see that the total amount right now is 582.06 trillion. We know at the current time that this is the global exposure. It is a boatload, but when we think about what's going on in the United States, we do know that the top 4 commercial banks hold 168 trillion in overall derivative exposure, and all of the commercial banks hold about 188 trillion in derivative exposure. We do not know what percentage of those are OTC derivatives, but I would speculate that a lot of them are, because the vast size of these trades, you're not going to be able to make them and have them go through an exchange. So when we're really thinking about what is going on with AMC today in this massive price movement that we are seeing to the upside, at the current time that I'm recording, we have ripped even further. We are up 21%, trading at almost $45 a share. This is going to put a lot of pressure on these smaller institutions that are short AMC that have been trying to push it down over the last couple of weeks when we've been trading at these lower levels. That is what I want people to really focus on, because these larger institutions are going to be able to keep kicking the can down the road. They're going to be able to keep maintaining these margin requirements, but with all the new proposed rule changes that are coming into effect, the time frame that they are going to be able to do that in is going to shrink, in my opinion. So we are seeing a lot of amazing bullish action today. And again, I do not think this is going to be over anytime soon. This could be the start of the next massive leg up, and I am incredibly excited at what we have going forward for our play in this stock. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people as possible. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I'm trading and which strategies I'm using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.